Orchestrate. Kevin Hassett with us right now, the former chairman of the Council of Economic Advisors under President Trump, kind enough to join us. Kevin, good seeing you. The Federal Reserve now has been looking at this inflationary spike that it thought would be short-term. It's not. But I wonder how much the war has changed things for that quarter point at a time, every Fed meeting strategy. What do you think?
Right. Well, one thing we could look at, and I know you know this, you talk about it on virtually every show, is if you look at what the market expects. And the market expects just about 7 rate hikes in a row. And so what the market is saying is that this thing that's going on in Ukraine isn't going to affect what the Fed is doing. I kind of lean that way, too, because if you look at the history of inflation battles, you never really start to get ahead of the curve in an inflation battle until the interest rate is above the inflation rate. We're so far from that right now that I think that the market can really digest, like 6 or 7 moves in a row without the kind of calamity that you might have expected a few years ago. And so with inflation this high, and by the way, if you run the numbers for commodities and energy for March, the print for the consumer price index for March is probably going to be as much as 2% just for the month, right? Like, so we're talking inflation is way into the double digits, and so there's just a heck of a lot of pressure on the Fed. Now I know that it's terrible what's happening to the people of Ukraine. They're in our prayers. It's having a big effect on markets, but what it's doing is it's driving prices up. And so the inflationary pressure, because of like the price of nickel, which is a key ingredient in so many things like solar panels and batteries, that price right there is increased pressure on the Fed, really, because those things really feed through to the top line.
But it flips the other way, right, Kevin? I mean, you can scold the Fed for not getting ahead of this. It's behind the curve, that other countries have been raising interest rates for a while right now, and we're just coming to that, and that we'll regret that. We'll rue the day. What do you think?
Yeah, I think that the Fed is totally behind the curve. I've been talking about inflation this high for about a year now, and the Fed is just now sort of getting its act together. If I were there, I would have started last summer. I think the risk is that with all of the turmoil in markets, with the potential conflict with China, if they give arms to Russia and so on, there's so much going on that you could easily see that flip it into recession. And so then, like, what's the Fed going to do when inflation's running at 10%, but we're in a recession? That's kind of, I think, possible. And in that kind of a state, like, I really am not sure what the right answer for the Fed is. But I think that getting ahead of the curve on inflation is important, because if we don't, the U.S. could get into an inflationary spiral that's unlike anything that we've seen, even in the 70s. And so I think the Fed is going to have to be tough, even if we enter a recession this year.
Normally it's very hard to orchestrate a soft landing, whether it's for an inflationary spiral or what have you. So the books don't make you optimistic about whether Jerome Powell will succeed. What if he doesn't? What if he, these rising prices, forget about how the Fed reacts to them, do weigh on consumers. Right. They stop paying for a lot of these goods. It's one thing to pivot from chicken to turkey to tofu, but it's quite another when you run out of those options and you just shut down. How likely is that?
Right. It's one thing to look at that I've been looking at very closely is just real income growth. And since wages haven't been going up as fast as prices, then real income growth right now is in the sort of -2, -3 range, depending on which measure you use. And in the end, there's an income account and a product account in GDP. And if the product account's declining 2 quarters in a row, you call that a recession. Well, if the income's declining, then the product account's going to sort of catch up to it eventually. And so I think that we really are looking at a very high recessionary risk at a time with super high inflation. And it's an incredibly unfortunate mix, as you say. But I think that if we don't get inflation under control, what's going to happen is that prices are going to move faster than wages, for maybe a number of years in a row. Real incomes are going to go down, and you're going to be looking at a very, very lengthy recession. And so I think we've got to take some strong medicine now before the wage price spiral gets completely out of control. And last thought on this is I'd be doing 50s. I'd be doing 50s, not 25s. So, I'd be trying to get the medicine in quick.
Wow.
Yeah.
I don't know if I like doctors like you when they do that. But anyway, Kevin, one I did want to get, you're a great student of history, and I've always argued that the difference between this and the 70s under Jimmy Carter is the underlying economy was in bad shape on top of what was going on with oil and energy and inflation. You could say, for now at least, the underlying economy is in relatively good shape, but that could peter out. So how do you see this going by the end of the year?
You're exactly right that the economy has been stronger. There was a V-shaped recovery, which we didn't know was going to happen from the COVID shutdowns. But the other thing that's different, and people forget about this, people talk about Ronald Reagan as the great deregulator, but Jimmy Carter was a great deregulator too. A lot of the deregulation that people give Reagan credit for was started by Jimmy Carter, who was really aggressive and today would be like a right-winger when it comes to regulations. Yeah. And so one of the things that has to happen is that supply has to go up so that supply is running ahead of demand and then prices can start to drop. And so Jimmy Carter actually did a pretty good job of deregulating and encouraging small business formation and so on, and making it so that the airlines could compete and the trucks were not quite so organized to drive up trucking prices and all that kind of stuff. And Biden's doing the reverse. Right, and so if supply goes anywhere because of Biden's policies, it's going to be a negative effect or positive effect on inflation.
Now, I remember the airline boom that started under Carter, and People Express came along, and cheap airfares. That you can argue still lasts to this day. Kevin Hassett, great seeing you again. Thank you very, very much.
Good to see you again too. Welcome back.